right, everybody. Now I gotta hold on. Adjust. Yeah. Let's not throw.
Yeti. Oh my god, I got it. The Bitty, the Yeti, the Bitty. Oh. All right, we got this. We got the Yeti. All right, so we're talking about strongman personal dividends. All right. We all know that strongman's not a dividend investor, but I wanted to do a show that dedicates my love of dividends and my love of strongman personal finance as a YouTuber and as also a good person. He's a good person. Um, he's not a dividend investor. Don't worry. He hasn't changed his tone for anybody who's I will not slander the name. He does, however, receive dividends through the VT. So there's that. Has he been lying to you this entire time? I don't know. But here we go. Hold on. Damn it. I'm trying something real quick, everybody. Hold on. There's I'm trying to upload the proper thumbnail, but let's just say this is being a little stupid. PNG. Yeah. That's the one I want. All right, let's roll. Oh my god, it's working. Give me 1 second here, folks. We're gonna save it. Just gotta get the thumbnail in here real quick, and I think we are golden and good and sexy. But anyway, so we're talking about my boy Strongman. He is one of my inspirations for continuing YouTube. There was a point where I thought I was gonna stop YouTube in general, and then I saw a guy who, and it's funny, this is right when I thought I was gonna quit doing YouTube. I pretty much stumble across this guy. And I start really watching his channel, and I think to myself, it's like, well, he has the same mentality I do. Not a lot of editing, but a lot of good content, a lot of information. So he's really an information dealer in a good way. And I thought, well, I'm kind of that way too. Not as good as Strongman, though. I really do think Strongman's has a more interesting perspective. His channel's a lot more interesting than mine. Mine's pretty boring. I mean, I'm sitting here usually drinking a Sprite with my slightly messy kitchen. It's pretty messy back there at the moment. The kitchen is. Other than that, everything else is looking pretty good. I'm trying to make sure that things are straight. Trying. But yeah, no, my boy Strongman is honestly one of the main people who I think is kind of responsible for me, and he's probably going to be sad to hear this, but he's probably responsible for me still being on the YouTube, because he inspired me in a lot of ways, and I want to thank him a lot for just being such an incredible dude and not judging me too hard, because he knows I'm a dividend guy. He knows I love my dividends. He knows I'm crazy about my dividends, and I can't live without them, you know? I need them. I crave them. I think about them. But a lot of people ask sometimes, you know, it's like, what's the point about dividends? They're not tax efficient. They're not. They're really not. I do believe that because cash is worthless, though, that even if they're not tax efficient, oh well. You know, a lot of my money is reinvested into really any company that pays a dividend and has positive cash flows and is managed pretty well. I want to make sure that everything I invest in, everything I'm exposed to, or at least most things I'm exposed to, is pretty well managed. So the economy is in questionable territory right now. This is one of the reasons why I've been getting into REITs so much, because REITs have been hit pretty hard lately. And I think unfairly, but it's when interest rates rise, it's when REITs get hit pretty hard. I still get into the best REITs that I can. I love REITs. They're one of my favorites. They're not speaking of non-tax efficient dividends. The REIT sector has the least, when it comes to dividends, at least it has the worst. I can't speak today, you guys. I'm sorry. It has the when it comes to dividends, it's literally the worst because you're really getting taxed quite a lot more. I don't know the exact rates, but it's a non-qualified dividend for a real estate investment trust majority of the time. I think if not all the time. So you talk to a financial advisor, talk to a tax person, but honestly, I love the income. I figure if I'm going to get taxed on my income anyway, my normal income from my job, I might as well get taxed on my dividends. The dividends will grow over time, so it'll kind of counterbalance, hopefully. And then it's not a guarantee. Past performance does not equal future results. The future is unpredictable. But diversification does help with the ignorance of the future, of not knowing what is next in the future. So I'm really a big fan of being diversified across all asset classes. I would like to say that I have an all-weather portfolio for sure. I know that my man Strongman is all about the Vanguard Total World Index being exposed to every stock, but I don't think it's enough to be exposed to just stocks. Even if it's every stock in the U.S. or internationally, I think you got to be exposed to as many different asset classes as you can. Now, when it comes to weighting, the weight of my portfolio is more towards stocks. That's really the truth. I don't really pay attention to portfolio weighting. All I care about is my money being utilized in a way that allow me to get more money. Bonds are great. I think bonds are by no means absolutely safe, but there's a lot of ETFs out there that give me direct exposure to different bonds. I think there's a total world bond index from Vanguard, which is pretty crazy. It's wild. It's a wild thing. But anyway, so I continue to invest as much as I can. And I do honestly love to encourage people to just invest their heart out, to do what they can. Because really, investing is important, and I like to encourage people to do what the smartest thing they could do is, and that is just invest. Now, I think no matter what you do, I think it's foolish to be out of the markets. If you're out of the markets, you're making a mistake. I think you should always be exposed to stocks, and keep a good amount of money on standby just in case a bear market happens. Because if a bear market happens, man, there's a lot of opportunities, a lot of beautiful opportunities that you can't miss out on. The majority of the time, I'm seeking out those higher yield real estate investment trust investments. But I'm also still I don't seek out I'm not just seeking out all the ones that crash. I'm seeking out other dividend opportunities. Just any company that pays a good amount of their earnings to the shareholders, but without breaking the bank. You want to appease your shareholders, but you don't want to give away the farm. The whole point of owning something is to be able to profit. Not just profit, but to be able to taste the fruits of your labor. And by that, I mean, there's really no true labor you do have to work for the money that you get, and you invest that money. So in a sense, the root of all of it is labor. So the root of my investments that I've made is my own personal labor. And then those investments, the root of that is just a well-oiled machine, well-oiled company with a lot of effort from the people that are employed by that company. So a lot of it's labor, one way that you look at it. But I do trade a lot of my money. I do consider that trading my money for investments to be trading my money for time. It gives me more time in the future. Um, I don't think money's worth anything. I mean, it's one of the reasons why I'm such a heavy investor is because if you think about it, there is no value in a dollar. It's not backed by anything. So you tell me this, is the dollar valuable? What is valuable? That is the question one must always ask. And if it's not valuable, it ain't worth it. So, hopefully, you guys are watching this beautiful, beautiful live video, just me yapping around. But yeah, no, this is really appreciation video of dividend stocks and just an appreciation video of my boy, Strongman Personal Finance. I really do believe he is one of um, the best and the brightest out of all the YouTube people out there. So, um, he's the best. I just can't say anything else except for that he's just an amazing dude. He's a good father. He's a good man. Um, so I like to encourage more people to watch Strongman Personal Finance. He doesn't exactly. His investment goals are definitely not not the same as mine because, like I said, I use my dividends to pay off my loans, which I don't have many. But yeah, my dividends, my assets pay for my liabilities, and that's kind of one of the reasons I have them. And in the meantime, those assets do grow over time. And what's great is like usually the dividends, not the yields, but the dividends themselves grow over time as well, which is perfect, and it's income growth. So I don't know, as the companies that I invest in do better, I do better as a result. And a lot of the companies that I invest in are very, I wouldn't say inflation proof, but very inflation resistant. I think that's always a big deal. Um, yeah, inflation resistance, though, is a key to the game. Saving money, for instance, obviously is inflation negative. You're always going to get screwed over if you save money, just because of inflationary forces, things of that nature. Um, let's see. Man, it's just fun doing. I love doing these live videos. I just want to thank you guys for actually watching these. Um, I always feel so darn lucky that I get these opportunities just to be able to talk to everybody. It's so much fun. But let's see what else we got here. Yeah, things have been looking pretty up on the up and up on the work front, which is great. It's been pretty cool. So I'm feeling very fortunate right now, but like I always say, just because there's some trust issues I have with my employer, I make sure that I'm still always working on the side, whether it's doing DoorDash, whether it's doing this, whether it's doing the podcast, you name it, making sure that I still rack up money that I can use to invest in actual businesses. I think that the thing is, you can live off YouTube money, by the way. You just have to know what you're investing in when you get that money. So take that money, invest it. It's not advice, obviously. It's advice. It's really just an opinion to myself. What it all boils down to. But yeah, it's kind of how it goes. My pussy's dry as fuck. Pussy's always dry. But yeah, I think I really do enjoy doing these stupid videos, these stupid crazy videos of me mumbling about whatever. And it's kind of what it ends up being is just me mumbling about my own personal opinions on certain aspects of finance. I just think that I really still firmly believe the best investment is a dividend investment. And I just really, I mean, just any sort of investment that pays you to hold on to the investment, solid one. I can't see any other. I mean, there's other ways to invest, obviously, but that's my favorite one out of all of them. It's the longest term. I don't have to sell anything. I want to just be able to take home the earnings, some of the earnings as a shareholder, as an owner. Obviously, I'm a minority shareholder in every single company I own. But the point is that if the company does well, I do well. The company does poorly, oh, I do a little poorly too. But companies that have the cash flow to pay a dividend are really important. Really important. They're, if there's no cash flow, is as my boy Kevin O'Leary says, even though he is a grifter to a degree because he grifted about FTX, but we'll forgive him for that. But if you think about it, one of the biggest keys to everything is, if there is no cash flow, just say no. It's a really important concept. I think that's been forgotten. For a lot of investors, you got to say no to things with no cash flow. If it's, you gotta. I just don't know what else I can tell you guys, but there's a lot of shitty investments out there, and some of them I just wouldn't. I wouldn't even have my hand in the cookie jar on some of them. There's just some that are just too shitty. That's my take on it, at least. Trying to think if I got anything else I want to add. I'm just kind of blowing through things in my mind real quick. I really don't have much. Hey, kind of, my brain's a little burnt out today. I don't want to add anything. If you're really looking to become an excellent investor, there's a lot of routes you can take. You can take the Jeremy Lefebvre route, which is just bad investor. If you want to be a bad investor, watch Jeremy financial education videos for sure. He will teach you to gamble on stocks that you're not entirely too sure if they have positive cash flow or will ever have positive cash flow. Or you could follow Strongman, who, in my opinion, is the upper echelon of the best investors. He's pretty much mostly stocks as far as I know. He does have exposure to bonds and things like that, I think through a few ETFs or some sort of funds that are bond related, which is good. You need I think bond income is absolutely fine. It's just it doesn't go up with it doesn't really protect you against inflation. But stocks, I believe, are probably like right next to real estate as far as a fantastic hedge against inflation. Especially if it's leased out real estate, because rent tends to go up over time, a certain percentage. So a lot of those REITs that I own, the rent goes up, which is fantastic, by the way, because when the rent goes up for instance, Realty Income. Give me an example. Realty Income, they own a lot of commercial real estate that has incredible companies like Walmart or 7-Eleven. Well, let's say 7-Eleven has to pay rent for one of the buildings that they lease out from Realty Income. Now, 7-Eleven's rent may go up over time. The rent for that building, they may have to pay Realty Income a little bit more, and that translates to more earnings for the shareholders. So, in a lot of ways, you're getting income in the form of a dividend that does grow, that should grow over time. And also there's the share price appreciation. Share price appreciation does happen along with the dividend payouts. Yes, you get taxed on dividends. I get it. You still get taxed even on long-term capital gains tax, by the way. So it's like the percentages are different, obviously, but still, you get taxed no matter what you do. So it's like if you're going to get taxed, you're going to get taxed, whether it's long-term capital gains, whether it's short-term capital gains. So if you're going to get taxed on your dividends, just get taxed on it. It's not financial advice. It's just my opinion. It's just my thoughts, my free-flowing thoughts through my free-flowing hair. But But no, I really do think that the best investments are companies with, or any company with a cash flow, with good positive cash flows, and if they have consistent cash flows enough to pay a good dividend, so be it. And if they're low cost of operation, that's even better. One of the reasons why I love cigarette companies, even though I don't love what they do, I love the fact they're profitable. And sometimes, if you can't beat them, invest in them. Seriously, that sounds like the worst advice in the world, but you know, people make a choice to smoke a cigarette. I make a choice whenever I light up to cigarette. I try not to smoke at all. I try to avoid cigarettes like crazy. I do have the willpower to say no. I do it as much as I can. But yeah, just it's kind of how it rolls. So at this point, stay cheap, my friends. Invest heavily. Stay diversified as much as you can. Diversification is protection against the ignorance of what could happen in the future. Never put all your eggs in one basket. I think that is foolish, because you just don't know. Like let's say, even though I love Coca-Cola, and I probably would if I had to pick one stock, and that's all I could pick was one single stock. Even if I would pick Coca-Cola, I'd still be nervous, because even though Coca-Cola's got a wide product pipeline and all that stuff, and they grow over time, they grow their dividends, stuff like that, but I'd be nervous. I really would be nervous. So it's like, what can you do? I'm going off on a tangent, and I'm sorry about that, folks. But what I really want to get at, what I really want to say is, if I was to choose one stock, it definitely would be Coca-Cola for sure, if I had no other choice. If somebody came down and said, hey, you can invest, but you can only invest in one company, it would be Coca-Cola for sure. But since I can invest in whatever companies I want, I choose to invest in everything. As many things as I can. As many asset classes as well. Not just stocks. I'm in bonds. I'm in commodities. I'm in even derivatives with, through covered call ETFs. I know it's blasphemy, but whatever. I like the little slight dividends. It's not efficient by any means, but it is there during a bear market, which can help honestly fund a portfolio. Covered call options can come in handy during a bear market when you need those extra funds for your portfolio. So it's like, it's good to have them. I don't stack up on them. I have an okay amount just in case, just to be intelligent about things. Okay, I've talked enough. I've talked so much. Talked too much. But I want to thank you guys for taking the time to view this video. I hope you're all having an incredible time, and please do the best you can to just keep investing, because remember, no matter what investment strategy you take, it's better to be in the market than out of the market. So be diversified, though, for sure. Not financial advice. Talk to a financial advisor no matter what, but diversification is really beautiful, man. I could repeat it a million times, but it really is beautiful. Anyway, catch you all later. Hope you all have a good day. Bye.